Hi, Clint Coons here with Anderson Business Advisors. And in this segment, I want to talk about how you run money when you're flipping real estate through a corporation. So let's get started. Now, if you have a corporation set up in your state, let's assume that you live in Texas and we've created for you a Texas Corp. Or this is an entity that you've set up for flipping property. It could be an LLC, depends. Keep in mind that when you set up this corporation, you are the owner of the corp. You are what we call the shareholder. Okay, you're also going to be the director and you're going to be the officer. So you have all three positions typically in your business. Now, the corporation was set up to flip property. So the question then becomes, where does the money flow? That is, how do I get money into the corporation? How does my corporation put the deals together? Well, it's really quite simple. Look at who owns the corporation. You own the corporation as the shareholder, so you move money into your corporation. So that's called a contribution. You're funding your business. Now, your corporation will enter into contracts for sale with third parties or for purchase, that is. So if you deal with this individual seller out here to buy this house, your corporation will buy the property, it will rehab the property, then it will sell the property. When it sells the property, the profits will be redistributed back into this corporation. Now, once those profits hit the corporation, you have some opportunities there to start doing some things with those proceeds. Number one, you should start reimbursing yourself for your startup expenses. That means you're just going to write yourself a check to pay that money out to yourself. Now, you should look at putting yourself on payroll. After you've reimbursed yourself for all your startup, then you want to look at payroll. So you would contact your bank and talk about setting yourself up on payroll and let them handle all the paperwork for that. It's much easier. You may look at funding a qualified retirement plan as well. So these are the things that you should be focused on in running your corporation. But first and foremost, think about the money. To get your business started, you need to fund it. You put the money into the corporation. That requires you set up a bank account for it so you can transfer the money in. Now you can go out and put your deals together. So when you're contracting with the seller, you're doing so in the name of the corporation. You buy the house in the name of the corporation, you rehab it, you flip it, you bring back in the profit. Now, on the off chance that you have to finance a property, that is, you don't have enough cash yourself to buy it and you have to use traditional financing, you're not using hard money, private money, or gap, then you're going to end up taking title in your own name because that's what they're going to require. So in that case, if you have to take title in your own name, then don't fret. Take title in your own name right here. After title is cleared, then deed it into the corporation, transfer it in. Contact us. We'll help you with all this. Get it into the corporation, do the rehab work, flip it, have the money come back into the corp, and we're back to then how do we take money out of that corporation like I discussed. So this is Clint Coons with Anderson Business Advisors. This segment was on how to move money in and out of a flipping corporation.